Morning, everybody. Welcome back. If all of you saw this past Sunday, Rams won. Yay. Still wearing my gear because now we're going to play a good team on Monday Night Football. So showing them love pretty much this whole week. Today I want to talk to you about assets. We probably talked about this before, but I think it's something that can always be covered again and again because you can never know too much about what your cash to close can come from, so to speak. So what I mean by that, when we have to document your cash requirement for closing costs and down payment, there's a couple of sources that are allowed. Any liquid funds that you have in your checking or savings account clearly are allowed, but we do look as to what's in the history of those accounts, and we'll cover that in a minute. You can get a gift from a family member. Now, gifts are treated a little different between an FHA loan and a conventional loan, so make sure you talk to your lender in terms of your financing. If you do expect to get a gift, cover that in detail with your lender because you don't want any surprises about whether you can use those funds or not. DPA programs, down payment assistance, always permitted. And then if you've got a 401k, a retirement account, your 401k plan may allow for a loan. So those can be used. Now, there are a couple of things that people do try to use that are not permitted, specifically cash. A lot of people keep cash on hand, and we cannot suddenly have this large deposit into your account just before closing because we cannot source where that money came from. So if you have cash on hand, do speak with your lender about a time frame of where that money needs to be in the bank. Credit card advances, cannot do that. You might be able to do a $5,000 loan cash advance against your credit card, but we can't use those funds. If you have an unsecured credit line with your bank, again, something that we cannot use. Those just create liabilities for you. So one thing that we're looking through in your bank accounts is we are looking at the transaction history. So everything that moves in and out of your account, we look at. So if you are one of those people that have multiple bank accounts and you keep moving money between accounts, and you're moving between like 5 different accounts, we look at all of those transfers. We have to see what goes in and what goes out of your account. So the more you move your money, the more complicated the loan can get for you. So it's really important to try to minimize your cash movement during that purchase process. We do not require all the funds to be in one account prior to closing. We just have to source however many accounts it takes to meet the cash requirement. You can consolidate everything just before closing, but you want to wait until we have actually approved the bank accounts. When we look at your accounts, we are looking for large deposits, and large deposits are basically anything that is 50% or more of your gross monthly income. So you may have payments that someone's paying you back money that you lent them in the past. We probably can't use that money if it exceeds that 50% limitation, just because you might not have an agreement on those funds. So be careful about what you consider your money. Make sure you're talking with your lender. We're reviewing those accounts so that we know that when you go to closing or even before you go under contract, that we've really got a good grasp on your asset situation, and we know that you're not going to have any issues during the approval process. So feel free to give me a call, ask any questions that you have regarding the assets. They can, like I say, be the most complicated part of the process. They can give you a headache, and I'm here to try to eliminate that for you. So send me your questions. Feel free to comment below. Like the video if you find it informative. And again, thanks for watching, and I'll see you on the weekend report.